On Tuesdays and Thursdays, we're gonna present only English for all of you guys. Okay, I know that we haven't been doing a good job um, presenting English material only, so apologies for that. But here we are, and I wanted to talk about the three most common mistakes of intraday traders, as I do, as we all do, and we all know that that's the best way to go with the markets. So I noticed, that those three patterns that are pretty common when you start doing intraday trading, when you want to go for scalping trading, and all of that. So really quick, I wanted to share the information with you and see if you maybe can actually get better at it if you improve those three aspects. Okay. So the first mistake the most traders do. Let's first talk about what is intraday trading, because I noticed that there is some differences of concepts of what you can consider with intraday trading or not intraday trading. If you have any question, either Spanish or English, I'm gonna help out with the translation from both sides. Okay, so here we are. We're waiting for the U.S. opening within the next less than an hour, and we already done a few updates of prices that we're gonna do. So to me and for most traders that we get ready with the price action, intraday means when you trade at the opening. When you trade at the opening, okay? So that means the first 2 hours of the opening. Because it sounds like when you say intraday, it means that you can trade within the day as many times as you want. And it's not actually like that. Intraday means that you take advantage of the scenario of the volume, and when you have volume, it's actually at the opening, not at the closing of the market. So the first 2 hours, either the first 2 hours of the US market, the first 2 hours of the European market, but those first 2 hours is what, in my opinion, is going to give you the best opportunities to do scalping or swing trading. Okay. Now, that being clarified, what is intraday? There's three, like I said, three very common mistakes. One of them, and the most important one, is that it's very common that when you trade on the first 2 hours of the day, you're gonna have highs and lows, high prices and low prices. And what people do is that, thank you, Caro, thank you, Ariel. All right, yes, thank you so much for your support. I know it's, but like I said, this material can also be understood with subtitles. But anyway, so when you have those highs, most intraday traders, they're going to sell at those daily highs. And when you have the lows on intraday trading, they're going to buy. So that's the first and most common mistake that I've seen many traders do. Again, you buy at the lows, you sell at the highs. I've been seeing that many times. And when traders get to me and they ask me what to do with something, and then I need to know the pattern that they actually they use to decide what to do. And they are like, well, I started trading at the opening, and then I saw the high, and then I sold. I got to sell because that was the high of the day, so I sell. And then what happened down here? Well, that was the lowest of the day, so I bought. Okay, well, let's start from that point. When you have highs on daily and lows on daily, and you are a swing trader and intraday trading, doing the job and doing your trades exactly at the first two opening hours of any market, a high means more buyers and a low means more sellers. Of course, there are many exceptions to that rule, but most of the time, and I'm going to say 80% of the time, when you have intraday highs and you are a swing trader on a scalper, those highs means buyers, those lows means more sellers. So you're doing things wrong, the wrong way. You're thinking the wrong way the market, okay? Now, let's go to the second mistake I notice for traders that they do intraday trading. They tend to diversify, and that's a funny concept. They diversify their money doing many transactions at very close prices. Example, the market open for buyers, and then you have a high, and then you sell, and you sell many times in different little lots, mini lots or standard lots, but different transactions at those prices. And they do the same when the market open for sellers and keeps pushing down, and you're like, okay, well, I'm gonna buy. And they do the same. They start buying with different transactions, different lots. And for them, that means to diversify their trading at the levels that they consider they have to enter with. Okay, well, that's the second mistake that you do. Like you don't diversify a strategy doing many transactions at the lows, at the highs, or in any concept. There's no diversification concept. That's not how you do it. It's just one transaction at a time at the exact price. You bet on one price, and that's it. And then you just sit there, wait for your target, or wait for your expiration, or wait for the possible reversal of the price. That's it. You know, there's no other way. There's no such a thing as diversifying a transaction in many different lots. So when I see the trading accounts of people that is actually losing also their everything, not just the money on their trading account, they're losing their hope, they're losing and stressing out, and they don't know why. And I see the trading account, and I see 5 different transactions in 5 different prices at the exact same levels. And there's no reason why you have to keep doing that. You know, there's no reason why you have to actually diversify a trade and different prices on those levels. So, example, the market open for buyers, is pushing up to the highs of the day, and when your strategy should be actually buying more, they start selling. Not only just that, but also with different transactions in different prices. There's really pointless way to, like, there's no way you can get anything from that. It's just one trade. Like, be very safe on the lots that you can actually open that trade. And I mean, you all know how much is one lot, how much is 1 mini lot, a micro lot, whatever the broker is allowing you to trade with. But don't try to diversify a transaction and many different transactions on different prices on levels that makes no sense. Just bet on one price, one level. That's it. The third mistake that I notice, and to me this is actually the most important one, is choosing the wrong broker when you are a professional trader and you do price action and you know your stuff and you know your business, and you get in the wrong hands, because that also can lead you to lose your trading account, lose your hope, lose your dreams, lose all, everything. Choosing the wrong broker. When I say choosing the wrong broker, means, and this is very important for you to understand, choosing the broker is not only spread and commission. It's not just choosing the broker because of the spread or because of the commission. To me, that's less important thing. When you do a scalping, when you know your stuff, when you go for price action, what matters to you is the execution. When they respect the price of your execution, that's what matters to you. So if you have a broker that is doing things right and they're executing your trade at the right price that you want, respecting having a significant spread, whatever, 0.8 on euro dollar, 0.9 on euro dollar, even 1 pip on euro dollar, that's okay. And the commission could be from $5, $6, $8, doesn't matter, as long as the execution is right and the price that you want to trade is okay, and you know it, because at first, and that happened to me my first year, I didn't know that. So I was following the wrong brokers always. And they catch you with the bonus free money to trade with, or zero spread, zero commission, and you fall into those commercial pitches, and that's when you choose the wrong broker. And that happened to me many times in my first year. And I thought it was you. It was actually myself, doing the wrong stuff. But once you get more professional, you start to realize that spread and commission is just the commercial frame that the broker is trying to catch you in. That has nothing to do with what you need, and has nothing to do with what you actually need from the broker. What you need from the broker, again, is the right execution at the right price, no slippage, that they have to respect everything you do, and that's all that matters to you, okay? The question is, and you might ask yourself, well, how you know when the market is a market, when the broker is a market maker, when the broker is it's a STP or ECN, whatever. I want to tell you the truth here. The truth is that every broker, even the institutional brokers, the biggest brokers of the world, the FCA brokers, they're all going to trade against your trade when you go for small lots. That's it. They have this sort of algorithms where they only get you to the open market when your trades are risky, when your trades are pretty big, okay? And when you actually are a good trader, when you are a professional trader and you know your stuff, most likely they're going to open you to not doing again the counterpart of your transaction, okay? Apologies for my English kind of rusty. It's been a while since we haven't uploaded any material in English, but hopefully this is going to be understood at the end. So again, what you care is actually the regulation. Okay, so if the broker is regulated, especially by the FCA, because they had to report everything to the FCA, that is actually the only thing that's going to guarantee you that the broker is doing things right. There are also many regulations that are pretty also serious about the business. But if the broker is not FCA, not regulation, no nothing, most likely they are going to play with you. They're going to play with your, executions, your prices. They're going to catch you commercially with zero spread, zero commission, whatever. And you don't have to care about that, because as long as you have the right price, again, the right execution, you're going to be profitable. But if they don't respect your execution, if they don't respect when you close a transaction, there's no way that you're going to make money out of your swing trading, intraday trading, okay? So try to think about that, and again, I'm sharing this because of my own experience. My first year, it was everything a mess, using indicators, using stop loss, choosing the wrong broker, again, selling at the highs, buying at the lows. So in that pattern, it's very common with many traders that they start doing this. So they say, no, I just want to go long term. After they try to go long term, they start seeing the market differently. Okay, well, this is very aggressive. I cannot go long term. I had to just pick, certain levels and get in and out. So when they fall into that conclusion, they start typically doing those mistakes that I already mentioned you. Okay. So again, I just wanted to share my experience. That's the way I see for the last maybe 10 years, and my first year was all a mess because of those mistakes. And if you want to keep studying from us, I wanted to share with you guys a link that we have more material in English. Okay, so I want to share with you a platform that we use to upload material, and if you go for the last part of this following link, you're going to see many videos that all is organized just in English. Okay, so for example, how to do scalping in the current market, the differences between intraday trader, scalping, and long-term trader, introduction to price action, stop loss versus hedging, market area projections, psychological techniques, and if you load more, you're gonna have pivot point indicator, everything that is related to price action. So please go ahead and use this link, because again, we have material in our YouTube channel which is not organized by language. So I understand if you get frustrated when you study from us, because again, we cannot organize it by language. So I'm going to share with you here a link. There you go. I don't know if you got to see it. Let me know. Okay, so that link. Yes, that's right, Ariel. We say no to stop loss and indicators. That's not the way to go for the market, especially nowadays. Volatility is gonna, the volatility of the market is going to really kill you if you use stop loss. That's not the way to go. You need to find an expiration price. You need to understand about hedging. You need to understand about reversal of the market, but not try to use a stop loss. The stop loss is just a tool invented by brokers to get you into safe trading. And honestly, there's nothing safe about stop loss. Okay, so I understand if the audience today is pretty low live, but I'm live at this moment because we had just already started today the English material. So this is the first day that we have the launching of English material, and we're also gonna do it on Thursday at the same hour. So get ready to study from our channel, get your questions ready for Thursday, so we can help you out with your process of understanding price action. And also I wanted to share with you the link that we open for our agenda on Mondays. We do an open seminar where I open my live trading session, so you can watch me trading live. You see my executions, you see my prices, you see everything. So I do a free open day on Mondays, and I'm going to share that with you also, so you can register yourself and you are set up for next Monday. Okay, that one we do it in Spanish and also English. I do it both languages because we actually going for Spanish audience and English audience, and we're all together that day. So, but you're gonna get to understand it, because again, I help out with the translation. So this is very important for you. Once you start studying price action and going with our material, then on Mondays you can put everything on practice, okay? Because that's something that I decided a long time ago when I started it, Watch My Trading, that I wanted to give people the experience of trading, not give people just education and just courses, whatever. Just study yourself and do your own thing. That's not us, that's not Watch My Trading. We are not like the academy of or trading academy, okay? We get ready, or we prepare you first, to finally start trading with us, and like I said, we're more focused on your final experience trading on daily basis with us. But again, we have to get you ready. So in order to get you ready, we are doing all of this: presentations, live videos, all these courses. But again, at the end of the day, my goal is that you got to use everything you're prepared for to do it in your own trading account yourself. Okay. So that's the link again for the agenda. And I have to go now to start the live trading session. And also, I'm going to share with you also a link of a chat that we have all together, because we talk on daily basis with my traders. So I'm going to share it's like an open chat where I myself there, all my traders are there. So you can use this chat if you want to, just to make any questions about brokers, about anything, because here again there's really no commercial intentions with anyone. We just take care of everyone that is joined to this market and they got the best possible experience. Okay, so that's the link that you can join us. It's an open chat for you. All right, guys, that's all I got for you. Thanks so much. I just wanted to make this very short and very specific, like the first steps that you had to control yourself if you want to join to price action and intraday trading. Those are the mistakes, so think about them, meditate on them, and then I'll see you on Thursday with your questions. All right, well, thanks so much. I'll see you then, guys, in 20 minutes on the live trading session for you. Bye bye.